Hello and welcome to another update video about Solana. I have to say, we're observing the crypto market today. Solana is holding really well again. So, at the moment, Bitcoin is trending down a bit, reacted to resistance, basically where it needed to. ETH is coming down a bit. A lot of the other coins coming down a bit. And Solana actually holding, completely neutral to yesterday. And it's consolidating just below this breakout point. And I would say there's a good chance that this here is currently a fourth wave, which might lead to the fifth of the fifth wave, to the final push around $25.50, this previous swing high, and $27, basically the next swing high, sort of as a key target range. And then Solana would give us 5 waves up. I mean, that's essentially what we need to wait for. I shouldn't say it confuses me, but where we have a bit of a disconnect between an Elliott wave pattern and the inverse head and shoulders that you can see on the chart here, which is basically this one, left shoulder, head, right shoulder. So where we have a bit of a disconnect is basically the target, because with one more high, we should really only get to, round about $25.50 to $27. Those are obviously the next sort of swing highs. We can just double check again with Fibonacci extensions. If we take the length of waves 1 through 3, and yeah, I can't even use the, there you go. Okay, there you go. So yeah, roughly 25.50 is the next swing high. The next Fib level extension gives us basically $25.75 to $27. So that's why I mentioned that range, not only structural resistance, but also Fibonacci resistance. Whereas, if you traditionally take the head of a head and shoulders pattern and you add it to the breakout point, this would send you to like $33 or something. So all I can do now is to mention that disconnect, and because I haven't got the crystal ball, right? So I can't really tell you if it's going to just go, which would be, to be honest, a bit unusual. But it could happen. Anything, anything can happen. The trend is clearly up short term. Okay, so the trend short term, the trend is up. It's been making higher highs, higher lows. It's just that from a pullback point of view, this wave 4 was a little bit too low to be reliable in an impulse. So that's debatable. It's not invalid, okay, but it makes it less reliable, which, however, doesn't invalidate it, because we never got a cross between waves 1 and 4, which is why I left, obviously, the white wave count on the chart. So it's getting more likely now, but we still need that fifth wave. At the moment, we haven't got it. You could argue, okay, this here, is this last swing high that we had, is this wave 5? Not reliable, okay? So I would say, due to the push that we had here overnight, or late yesterday, you could argue that, maybe this was a long third, but it was not the fifth yet. It's only 3 waves up so far, as it seems. So at the moment we are pushing against resistance. So, as long as we don't break below this wave 2 low here, which was at around about $21.60 here, this swing low, as long as that's the case, or that's not the case, and we're holding that support, obviously this wide wave count can still play out. But that would be an invalidation point. So I'm certainly watching for it. And if we get these 5 waves, then I will indicate support for the wave 2. Until then, it's a bit of a wait and see here. But all I can do at the moment is to point out there's a breakout point there similar to here. If we go by more traditional patterns, it could send us to above $30. It would be a little bit unclear how it wants to achieve that. From an Elliott wave point of view, it would really only work in 2 ways. Okay, so it could be, but that's not my preferred option. It could be a 1-2-1-2 setup, would not be my preferred option. Then we would be in a third wave already, but this is not the preferred option. Won't rule it out because of the deep correction here, but this would be a wave 1, which is too long to be reliable. Or the other way is that the yellow wave 2 is playing out just as a larger A, B, C structure. Okay, and that could certainly send us up there $30, $31, no problem. But it would not be a bullish structure. It would likely be in the yellow count just a large ABC corrective rally, which would even be in line with Fibonacci retracements for a wave 2. So the 78.6 retracement takes us to $29. That would still be a little lower than the ideal target for that head and shoulders. But I mean, again, nobody says we need to get there, right? So this would be a scenario in which a larger rally would be, let's say, allowed and possible. From an Elliott wave point of view, also quite likely, but it would not be sustainable if it is the yellow wave 2. So they are the levels I'm observing. They are the scenarios I'm observing, so I'll keep you updated. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.